So, in case you don't know, tech and media are like vacuum cleaners for money. They require an absolute ton of it, especially when they're trying to expand. And because of the market forces that have been in play for many, many years now, they're always competing with some other rival, requiring an influx of more and more. In a recent report from Variety in their VIP section, they talk about an investment slump when it comes to venture capital. This is a stream of money that both tech and media have relied upon recently to expand, grow, and pursue their global domination dreams. Okay, that last part, a little bit of hyperbole, but you'll forgive me for that, I hope. Right now, though, there are key economic factors that are, well, basically flashing warning signs to everybody in any of these industries. In fact, they're telling us, according to this report, that they're indicating a possible recession. A possible recession, really. Anyway, so this not only is going to affect those of us here in the United States, of course, but, well, it's going to be global if you aren't already experiencing it now, which I would argue you already have. And of course, that's squeezing all different types of markets. You can see that in the volatility day to day. But because of a lack of visibility, as is pointed out in this report, venture capitalists are slowing down the pace of their investment dramatically, specifically in Q3 of this year, specifically as opposed to last year in Q3. In fact, the drop-off was so steep from Q4 of 2021 that in Q3 of 2022, that fall-off has declined 34%. That's a big number. And of course, this is based on information acquired by market intelligence firm CB Insights. Now, this is the largest percentage drop in this sector as far as investment goes in over a decade. So it's a significant drop. It's also important to note that last year, money was cheap. Interest rates were still artificially low, and therefore acquiring money to make more money wasn't that difficult to do. So you saw a backdrop of investors relying on the cheap availability of money to essentially go out and spread it far and wide. And again, these markets are affected by the same things that you and I are. They're affected by increased demand for goods, increasing expenses for those same goods, and a supply chain that's not exactly cooperating with either of the first two. And of course, a conflict half a world away is also not helping and putting pressure on, well, all of the global markets in various different ways. If you just look at the months of September, you'll see that in September last, in 2021, you had over $58.76 billion in capital investments from global venture capitalists. In this September, you had $21.82 billion. Again, significant drop-off. Just in that 1 month-to-month comparison. In fact, if you look at the percentage, that's a 63% fall off September to September. So as the economy deteriorates, which it is globally in particular, you're going to start seeing a lot of these venture capital firms sitting on the sidelines. They're going to wait to put money into these tech and media companies. And I have a feeling that it'll be a while. Now, not to cause any panic for those of you who work in these areas, because venture capital is still heavily invested in tech and media. In fact, to the tune of over 40% of their investment this year. That's probably not likely to change, as usually that has the largest yield. Real estate, however, is probably going to stagnate, as are any materials and almost everything else. In fact, I would venture to say with venture capital that you'll see a leveling off of all of the other investments and holding true to what they're doing right now. You may have also noticed that along with this, there's been a pause in media content creators' acquisitions. Since 2021, when we had almost $1 billion worth of Hello Sunshine go up for grabs, which was acquired by Kevin Mayer and Tom Staggs with their little group, and Spring Hill at $725 million, which was basically LeBron's company sold off primarily to Redbird Capital Partners. You have a falling off of the value of many of these deals, if just an outright, stoppage of any of these types of acquisitions. In fact, I think the most significant one recently that occurred would be the offer for the North Road Company, which was $800 million. Now, these deals used to happen every few weeks, and now we've dragged out to every few months, or one every month, which again is a much slower pace. Of course, all of that investment in content creation is coming out of a huge private equity investment boom for media and tech, which I anticipate will also fall by the wayside. Most of these companies are now having to pivot back towards profitability and capitalization of their IP. They're looking at cost efficiencies, as you can see over at Warner Brothers Discovery, where they're going under a restructure that'll last until 2024. Since we're being quite clear about all of this, I'm going to say that in a recession, there still is an opportunity for successful launches of tech and media companies, and most other companies as well, if you're willing to work at it. And don't forget, and it's brought up here in this article, that you have many examples of this, which would include EA, which launched during a recession, Microsoft, Uber, and Instagram. Again, all coming during a recession. The article here also goes on to describe the possibility that after a small pause, something I would call a return to reason, all of these types of investments could go back into their spike mode, meaning that you could see a heavy investment in tech and media sector from both private equity and also from the venture capitalists. But hey, what do you think? Do you think that the recession is going to, cool the jets on a lot of these kinds of acquisitions and further investment in these companies? Or do you think that this is a small blip that maybe only lasted a quarter? I anticipate, and this is just me, that this is more than just a short-term pause. I think a lot of people are rethinking their plans because of the global crisis we're currently in, which is a recession. Also, are you planning to change anything in the way that you go about your daily lives because of some of the financial pressures that not only you and I feel every day, but are obviously getting to some of these corporations? I'm just curious. And finally, do you believe that these interested parties have returned to reason? Or do you think they know something you and I don't know? Anyway, feel free to leave the comments down below. Hopefully we can have a conversation. I'll be traveling, as you know, this week, so these videos will come out at different times, hopefully at convenient times that'll work for you. And I'm off to support independent creators as we meet up in Orlando this week, so check the notifications and make sure they're all turned on so you can see us interact live whenever that actually happens. And I intend to go live pretty much daily while I travel, so do look out for those. And of course, be sure to take care of yourself, take care of others, wash your hands because it's good hygiene. And until next time, bye. And don't forget to check out my Rumble at rumble.com/CultureCasino. Thanks for visiting today. Be sure you're subscribed and hit that for alerts.
Yay! Of course, like and share all of the videos that you can, as it helps with the algorithm. Have a great day.